The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look here at these markets. We started out a little bit weak last night and continued down. There was a very strong reason for that. I posted the charts for the FTSE and the DAX. You can see they've been under some pressure and have started to move lower. But the main thing that we really need to pay close attention to is what's happening to the E-mini here, folks. Let's take a quick look here because the NASDAQ has been given signals yesterday and again today that it is really in trouble. And then that's my 2 cents worth just from the technical picture. But you notice here the E-mini last night, we had this pretty big break. Yesterday we make the ABCD up above the 61% retracement that came in at 32.53. We got as high as 32.56 and a half. And then, we've sold off, and I believe we're going to break this level right here that we're looking at around 32.10. I haven't updated it as of yet, but I think it's got a chance for doing that. And the reason for that is, hold on just a second. What are we talking about, a civil war? We're not going to have a civil war. What the hell's the matter with you people out there? Ruby, stop taking your medication, honey. There's not going to be a civil war. Not a chance. Okay, let's move on here to that. Hey, everybody. Hey, you're right, Terry. I should shut up. All right, let's move on. Okay, let's move on here, and we'll see what's going on here. Okay, all right, let's move on here just a minute here. Okay, let's not get into the politics on my show, boys and girls. Here's the S&P. This is why, yesterday we had the Fed out. They had a nice little rally here. As you can see here, we've had a really beautiful Gartley up there yesterday. You can see the ABCD. The 707 came in. The actual 618 was 3 points lower than that. That sets up an ABCD, folks, down to around 3160. That would be a pretty nasty day to the downside, but that is a Gartley. If we take out those highs at 32.57, then we could really scream to the upside, and we could certainly do that very easily. But there's one other market that really needs your attention today from the cheap seats here in Tucson, Arizona, and that is the old Bondolis. Let's get these up here because we've been waiting for this number to come in here, and we is there, as we say, into trade. You'll notice here all this resistance here since March. We're up against it again. We just hit 182.15, I believe. Anything in that area between 182.15, I think would be a good selling opportunity, but who knows? It's just to, see what's going off. I don't know, uncivil war. Yeah, folks, this thing. Well, hey, boys and girls, let's take a deep breath here, okay? Look, I have a hard time assimilating all the crap that they give us on the TV. That's the fundamental stuff plus all the other stuff. The one thing that I do know is that I do know these little bars that are there, the ones that go up and down. That I know. So if there's more buyers, the prices are going to go up. If there's more sellers, the prices are going to go down. That's the basis of what I'm looking at. I mean, so let's. I don't want to get into the politics. If you're going to start doing politics, boys and girls, my resignation will be at the end of today's show. So let's stop it. I don't want to hear it anymore. It's just. And here you're talking about somebody who's only voted in 2 elections, so I should shut up and see what's going on. The dollar index has not made the price, folks. We've watched this dollar index get to that level. The level is 92.78. We hit 93.16 last night. I think we've got a little bit more to go to the downside, and then we'll see if the thing will finally, get the euro to move. I don't think the euro is going to get above 118 by very much, but I've been wrong a lot lot. There's another market out here. By the way, Shane Smolian will be our guest today, which is good. I wanted to cover the Bitcoin, and then I also want to cover soybeans here for just a second. Let's get this up here, put this up here, and we'll take a look at it. There we go. I watch the History Channel. That's the one I like. All right, you see we've broken out above that 10,000 level in the Bitcoin. We pull back below it just a little bit, but look at this, folks. This has been really tight days for 4 days in a row at that high level. That's very, very bullish. So pay attention. We hit a major price level yesterday, folks, in something, and that is a Christmas gold. If you remember here over the last, this happens to be a daily chart of December gold. We made the 3.8% retracement back there on April 20th. That came in at 1662, and the ABCD measured to 1997.80, and I believe I saw a $2,000 print yesterday. Someone said that that might have happened, so I don't know for sure. But we've had a $70 correction already from that level, and now we're bouncing around in that level. So that's it. Platinum has gotten hit really badly, which is, not unexpected because it's been the weaker of the two. So we'll see that. Did anybody see a print of a 2,000 on the gold? Because I'm seeing it, but it doesn't show up like it should. So I'm just curious if anybody saw a 2,000 print, if we saw that. So we'll see whether that's going to go. There was. Thank you, Mr. Z. I appreciate it very much. Okay, now give me a second here, and I want to pull up the soybeans here, and we'll see what's going on here with the old soybeans. Give me a second here. I got to get these November beans up. Oh, I had them in my crosshairs here, and then the crosshairs left, and there they come right back, and here we are. There we go. We're going to be coming down just a little bit more, one more time here in the beans, and then we'll see where we stand here. There we go. We had the first correction. I'm going to clear up some of these lines so you'll be able to see it just a little bit easier. But, that's not what we want here. Okay, this is what I'm hoping. Now, remember, hope is not a very good word here in the old commodity and trading realm. But if we should get and with these markets the way they are, if we should get this particular pattern, which would be a really nice Gartley, and this is what we're watching here. Yep, on July 28th. Wow, that was Ralph Elliott's birthday. July 28th. Wow, shut the front door and raise the rent. Anyway, look at the ABCD here. If we can get these little puppies down about another 20 cents, down around 8.64, I think you have to take a look at those November beans, folks. We made the ABCD to the upside at 912. We came down, went up to the 78% level at 904, and now we're coming down a little bit here. We've been down 3 days, and if we could get these down to about 863 in those November beans, I think that's a pretty good spot to look at. It's a 61% retracement. It's also a higher bottoms, which is really nice to look at. And you don't have to risk very much there. To be a farmer at that level, you risk about 8 cents, and that's about it. We'll be right back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I would like to bring up the chart of the natural gas. As you can see, we did have that double bottom back there on June the 26th. We came down and tested it at the 78% level on June the 20th, and now we're completing an ABCD here up around $2 a cubic foot. So at that level, I would start to expect another pullback. And if you were able to get that, let's assume here that we're going to go up to $2, and then we pull back to about $1.75. You'll have a beautiful 135 higher bottoms, an excellent place to take a look at the natural gas. Now, if we explode and go a lot higher than the 200, and we go up to like 205 or higher, then that's telling us it's already starting to move, past those levels. But right now, it's doing exactly what it should be doing, and I would assume that's what we're going to have happen. Remember, assumption: you make ass out of you and ass out of me. So let's make a little bit of a change here in the format for just a second. I wanted to bring up a couple of charts that would be really looking at. Looking here, this is one of those things. Okay. 1 second here. I want to bring up this here just to show you what's happening here, folks. No, I don't want to do that because that's off the train of thought, and I don't want to get that off. I've covered the Bitcoin. Oh, the main one, folks, that I'm focusing on today is the Treasury bonds, and that is a reason, that I think it's just very important that we're at that level, that you have to really pay close attention to it. Whether it's right or not, I don't know. The other one that is very important, if you'll remember, I posted the chart yesterday of the Singapore trading group, these large guys at big trading dudes over there, and they posted this among themselves. And what they're looking here is a possible, what they're looking for is a possible, gap down here in an island reversal. If we get that, now here we've got one set up, because we matched another low. We came down another $65. We came all the way down to 1936 in the August. And if we close somewhere around that 1930 area, 1920, and then gap down, then you would have that island reversal. And if you gap down on that island day, you just sell it as it gaps. And what you do is just bada bing, bada boom, just hang on, because you've got a lot of people that are long in there. Remember, starting this week, I wasn't here the first 2 days, but I was following the open interest very closely in the gold and silver, and it was not increasing like it should be. It was decreasing. And when you got new high ground like that, with silver up, $3 or $4, 15 or 20% a day, and then you have gold up about $50, and the open interest is dropping. That's not new buying, folks. That's short covering, and that is not a strong situation. And we're seeing it unfold right now, that the market, and this could change in a minute. It could take off and go back up again. So we'll see whether that's going to be the case or not. So, someone's asked me a question: why do I have such a bad taste in my mouth about politics? Folks, I'm a little boy from southern Indiana, Terre Haute, Indiana. My father was heavily involved in Democratic politics. He was part of the machine out of Richard Daley out of Illinois. And in 1960, when I was doing my first voting, he was against Nixon. My father took me we went together to the voting thing. And we went in, and my father voted 7 times for Mr. Kennedy, and he told me to go in there and vote 7 times for Mr. Kennedy. And, of course, I went in and voted 7 times for Mr. O'Brien, or Mr. for Mr. Nixon to get it up. But that's basically why, is it was so corrupt, and I didn't vote again until 16. That was the second time I voted. But anyway, I know it's a bad thing being a college graduate and stuff, but that's neither here nor there. We'll have to pay attention to that and not worry too much about it. Okay, if you'll remember here, we had this thing with Larry Williams about the 28th of the stock market, and so far that's been pretty good. Yes, back in those days, it was, you're in a little town, and that's just the way it happened, I guess. I don't know. Oh, I guess it all enters out okay, but let's move on here a second here. All right, let's get on here. That was Larry Williams, and we had another one, if you remember. This one comes from another really smart guy, Jeff Hughes, over a good friend of Rich Anderson's, and he was also looking at around the 23rd of the market to see if it would break around that time. So far, it hasn't broken much, but it's getting that. Now, if we get below 3160, folks, that's going to be the really key spot, because that means you're down more than one standard deviation, and that means you're going to go lower. And believe me, this market has enough reasons to go lower, had enough reasons to go higher, so it could have enough reasons to go lower. So we'll watch out to how these things move on. Okay, we've covered the S&P. I've covered the gold. The crude oil, I've been saying for a while that up that level, that 3 drive that we had up here in the crude oil was very, very strong. We're down now almost $3 a barrel from that high, and I think we're going to be going lower. And I think that's an important thing that we should remember that we're looking at. Oh, here's another one from Bloomberg that I really need. This is from Maudlin, John Maudlin. That's a very interesting one. It shows the relationships of these stocks here, with these heavy, high cap stocks, how they've been going up, and you can see how the regular stocks have not been, participating in this. But we see that when we look at the Russell and the Dow Jones and stuff like that. The Russell and the Dow Jones have been the ones to sell, because they have been very, very much weaker. I sent several charts out to the 24/7 folks showing that the Dow Jones was a whole lot worse. Now you see that pattern that we have in the S&P today. Here's the same pattern in Intel that we had, and you'll notice here you had the ABCD Gartley up there at the 61%. It's 62. It closes at 60 and it opens at 50. That's the kind of thing that can happen to some of these things. I have a very smart friend that thinks that Intel is only worth about $5 a share. So I don't know if that's right or not, but that's quite a ways from where we are right now. So that's the main thing. Now, if you want to treat yourself, go look at the price of the Dow Jones Industrial Average and compare how it is to Intel, and you'll be able to see that it's very, very similar. So that's a key thing to pay very close attention to. That's my 2 cents worth, and I'm sticking to it. Okay, now I needed to explain one other chart to you folks, and then I will be back in business here's where we are. This is oh dear, I can't use this one because I don't have all the data yet on that. I'm sorry on that one, boys and girls. The question arises about the hogs. They've been down here for so long at 49 cents. It looks like they're never going to go up. Cattle have already started to go up, but the prices of food will probably go higher this year, but whether it'll be much, but next year, look out, because if we have any problems at all with distribution or anything, we're looking at some really serious problems. Stay tuned for the Shane Man, the Wolf Trader. We'll be right back. 877-927-6648.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, I just realized I've been having technical difficulties, and I didn't even realize it. I hope we have the Shane Man on the line. Shane, are you there?
Can you hear me?
Yes, I certainly can, my friend. You're going to have to take over the mic because I've been knocked out of the den, I guess, from political purposes. That's okay. Anyway, if you'll go ahead and take over, my friend, I'll be logging in right away. So go right ahead.
Sure. Can you see the chart? Can everybody see the chart?
Yeah, I think we're okay.
All right, so I'm going to start out with coronavirus. Good morning, everybody. Hope everybody's doing well. And so this is Shane Smolien from Wolf Trader Futures, and I'm going to be talking first about the coronavirus. So I have some charts here, and what I'm going to do is I'm going to indicate what I think is a good chart and what I think is a chart that needs some interpretation. So the first chart I have here is, and I put a little green checkbox there in the left-hand corner. This is a headline. It says the U.S. is on the verge of a lockdown 2.0. And I agree with that. I think that that's true. I think that the number of cases, while definitely overstated, is on the rise. And I think that we're going to have some issues going forward here, particularly in the fall. So I think that's true. The next slide here, these are the actual numbers of coronavirus cases. So I put a little asterisk here next to these numbers to explain to you why I think these need some explanation. The number of cases, the 17 million here, that doesn't account for the people who have recovered. So that number just keeps rising and rising and rising. So if somebody gets it and then gets better, that number is still going to go up. So just want to talk about that. And then the next one is the deaths. It doesn't take into account the number of deaths that naturally occur or that should occur. So we need to be looking at excessive deaths. So when I see statistics like this, it's not that they're wrong. It just needs some interpretation. Next chart here is a checkbox green. I think this is a good chart. This is showing where the COVID is active. Okay, so this is definitely a good chart. It's active in the southeast, of course. And then we have up there, we have, Nevada and Idaho are also showing some increases. And this could be for multiple reasons. I know it's spreading more among young people right now. So, it could just be that people are not paying attention, or they could just be indoors more too. So somebody wrote me with a theory that it's the reverse of the flu season in the summer because more people are inside. So that's definitely a good theory. But that's a good chart. This next chart, this is a good chart. This is a checkbox here. This is the excess of deaths. So this is what we really need to be looking at. This is the moving average down here. This is what it should be. Okay, this is the number of deaths. And we had the flu over here, and we're hooking up a little bit here, and there is a pullback there, but we're nowhere near where we were at the peak. So I think that's an accurate representation. This next one, this is Florida. This is the number of new cases per 100,000. It's 0.48%. And they say that it's going to be more than 50% of the population will be infected. I think that's kind of a questionable statistic because it's not taking into account recoveries or people who don't have symptoms. So that's kind of misleading when you look at that one. Next graph here, this is definitely a checkbox plus. This is the United States is leading in the testing. So yeah, that's true. And so we need to take that into account. That's a good chart. Next one here, this is a good chart. This shows the percent of positive rates. So this is Florida. So if you look at these two charts in Florida, this one makes it look more catastrophic. This is probably more what is going on. We're approaching what we saw in March. Okay, so the rest of the nation is not, but Florida is. This is probably accurate. The number of the positive test cases are going up. So I think that's a good one. This is Florida. So you can see this is the excess of COVID. We are definitely going up. But one thing I want to show here is that there is a little pullback here. So when you look at this chart, when you look at here, there is a pullback last week, and we're starting to see that on multiple charts here. And I'm going to show you, and that's a leading indicator. So that's good. Arizona also has that one-day pullback over here. It was rising, it came back. This is also a good chart. It's showing versus what the excess of death should be. Okay, because I could put a number up and say there's whatever it was, the number of deaths. I could say there were 600,000 deaths. Well, that's how many people were supposed to die without COVID. So we got to look at what's going on above. And this is Texas. Texas is in a more dangerous situation right now, but you can also see that pullback last week, which is interesting. So that's a new finding. This next graph is the total number of cases. So I'll put an asterisk next to that to say this is probably not a good way to look at it because we're testing more people. So, number of cases hovering above 60,000. But again, more people, more positive tests. Now, this next graph is one that I created from the CDC. I got this data. This is not, fake news or anything. This is actual data from the CDC. But I made it in corona cases per test. So this is like a percent, okay? So this is really important. When we were at the peak on April 11th, we had about a 21.5% positive test rate. And that was with the poor tests. The tests were not as good. So it probably was much higher than that. We hit a low around June 16th here at a 4.5%. And we hit a peak on July the 12th at an 8.8% positive rate. And we're currently at 8.1. So that is sloping slightly down, and that's consistent with the charts that we saw, just the ones that I just showed you with the excess of deaths. So it's possible we could be, if people pay attention, social distance, wear their masks, it's possible we could contain this. There's still time. But I think this is a more accurate picture of what's going on. This one here, this is the deaths. It definitely mirrors this graph here. But it's a little bit lagging because, remember, it takes people time to, they get sick, and it takes a couple of weeks, maybe even a month before the deaths start going up. So this is probably lagging about a month, but it's a better representation than this one, which was the number of new cases, because that's, there's just more people being tested. So, in summary, there is an uptrend. It's possible that it peaked. We don't know, but it's definitely nowhere near where the peak was. But there are hot spots like Florida, Texas, Arizona, where it is high. It's like 19%. It's higher, much higher in Florida, obviously. So depending on where you live, the outbreak, it varies. But this is the national numbers here. So we're nowhere near where we were, which is good. But that doesn't mean it can't get up there. And that's the one thing that we got to watch. And again, so. This is not to downplay the virus, but this is just to try to give an accurate view of what's going on. So anyway, what do you think about the S&P, Larry?
Well, I think it'll fluctuate. I have a question from one of our listeners today, and that is the Federal Reserve buying gold?
I don't think so, but I'll check into that. I mean, we have reserves. The U.S. Treasury has reserves, but I don't know. I don't see it. I know they have holdings, but I don't see them actively purchasing gold every day. I don't see it. I mean, it could be happening off the books, but I don't see it. They're really just issuing credit and purchasing these loans and purchasing the treasuries.
Okay. Okay. When we get back from our break, we have another question about zero interest rates. So we'll be right back with Shane Smolian, WolfTrader.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. We're with Shane Smolian, wolftrader.net. We have a question from one of our listeners, Shane, about the fact of zero interest rates. Any thing you can see on your crystal ball?
That's a good question. I think they're going to try everything they have to avoid that. They definitely don't want to have negative interest rates, and this is one of the reasons why I think the dollar had been so strong for so many years, because we were leading the world in that. So I think they're going to try everything they can to stop it. I mean, whether they can or not is a different story, but I think they're going to try to stop it. Just a comment on the gold. So the Federal Reserve does not own gold, but they can act as a custodian. They're the custodian of gold. So what that means, like, there was a gold in the Gold Reserve Act of 1934, the Federal Reserve was required to transfer ownership of its gold to the Department of the Treasury. So at that point, it's specifically to the Department of the Treasury. The Federal Reserve, they act as a custodian of gold owned by account holders, such as the U.S. government, foreign governments, or other central banks. So it's kind of confusing because it might show up sometimes, but they're really just a custodian of it. They're not the owner. And they definitely are not buying it for themselves. So just to clarify that, because it's kind of confusing, because if they're the custodian, but they're not the owner. So that ended in 1934, just to clarify. S&P. So where are we? We're definitely in a period here of just no advantage. We're fluctuating around. We attempted another short pattern into here, and it just went nowhere. It went sideways. So, when I saw this Fed just go back into a buy, I just don't want any part of it. When you have a Fed meeting, the market it went up into the meeting and then it collapses today. Very typical the day after a Fed meeting for the market to reverse. That's one of the statistics we track. It's a very a highly reliable thing. It's a one-day play. But again, you got this wandering around. But to me, I'm looking at this Fed juice and I'm thinking to myself, I don't want any part of a short right now. I also have this new indicator, which is an optimized system, which is called the Wheel of Fortune, which is a trend tracker. It's a beautiful, beautiful system. It also has us pointing up on the S&P. So until that turns down, I'm not really interested in shorting. Now, the planetary speed index is in a sell, so they're just in conflict. So there's really nothing to do right now on this. So when it goes sideways, by the way, we can track these statistics. So this is something that I offer the subscribers. This is called the day percent statistics. And this was put out before the week started, just so you know. It tracks on each symbol. I track statistical moves, okay? So when you get a sideways trend like this, it tends to play these out. So it said that Monday was going to be, as a high percentage that it was going to be up. In fact, Monday was the highest percent chance this week, and Monday went up. You can see that right there. Tuesday was supposed to be the second lowest chance of going down, and it went down. You can see this right here. Wednesday was just kind of a neutral day, but we know the Fed was there, so we just didn't want any part of that in terms of trying to be short on that. But look at today. Today is Thursday, and this says that this is, number one, this is the weakest day of the week, so the percent up is 5, which means it's the weakest day, and it's the highest percent chance that the market's going to reverse from the previous bar. So what did it do? So you had a really good play here on an intraday basis because the market was up yesterday, and there was the highest chance it was going to reverse and go lower today. So that's Thursday. So that's the daily statistic. So I just wanted to share that with everybody because I post this on every symbol. And, they don't always play out like this. But a lot of times when the market gets range bound like this, these tend to play out. And so, right now it's just kind of in this meandering mode. We do have negative seasonals coming up. There's no doubt about it. The 23rd, the solar cycle made a high. And, that's a negative. But until the tape starts moving with the market, I'm not really that interested in it. Okay, so it's really got the Fed juice really has to be moving in the direction. Longer term, I think we're still relatively okay. The Fed juice it's starting to flatten out a little bit. The Fed has been pulling back on their operations, but still okay. Nothing crazy. Like I'm not, I don't see it falling, but it's just kind of a neutral thing on the long term. U.S. dollar. Everybody's talking about that, but keep in mind, yes, we have had a very strong surge down in recent months, but the 200-day moving average is still rising above the 500-day. We're still in an uptrend on the long term. So as much as people want to say that the dollar is finished, we really need to see that trend turn, and it hasn't really turned yet. I mean, it's for the short term, it's definitely going down. There's no doubt about it. Now, the U.S. dollar. The reason why I like to track this is because it has a direct effect on equity prices. A falling dollar is going to be bullish for anything priced in dollars. This is the RSI 5 of the U.S. dollar. You can see that we're hitting a low. We hit a low on the 28th that we had not seen since 2008. You see this, which is March 7th, 2008 over here. So this RSI 5, I like this period. It's just anybody can do this at home. It's an RSI 5. And the reason I like that is because that's about the length of a week in the market. So we're hitting these lows right now. So I think it's possible that this dollar could be trying to bottom at some point here soon. Now, it doesn't mean it's going to bottom today or tomorrow. But when it gets down to these levels that we haven't seen in over a decade, we really kind of have to pay attention. And when we look at the metals, one of the things about the metals right now is they're in this uptrend. This is gold right here. So gold's in this uptrend, and it has positive seasonals. Okay, we're in this positive seasonal pattern right now, and it's positive for about another month. So it's very possible that gold could extend here. Okay, but the seasonal pattern of the dollar bottoms on around 8.3. Okay, so what that means is that if gold wants to keep going higher and the dollar does bottom in the next week, that it's going to have some headwinds. Okay, it doesn't mean it can't go higher, but it means that gold is going to have some headwinds here. So, there's still some room for gold to go up. There's no doubt. But that, like I said, if the dollar bottoms and then right around early September, the seasonals start to end for gold. And then we also have a retrograde Mars. So for those of you who follow this, retrograde Mars rules metals. Okay, it rules iron. Anytime Mars goes retrograde, gold has problems. If you can go back and look through bull markets in time, when Mars hits that retrograde period, and this is in September, gold tends to halt in its tracks. I don't know why it does that. It's really weird. It's kind of spooky, actually. But we got to watch that. So I think that gold could extend, but once we get into that September area, I think gold could start to have some issues because a lot of people are asking about gold, but it's a popular haven right now. I mean, a lot of people want to own gold with the fear out there. But we have to look, like I said, we have to look at the dollar. We have to look at the seasonals. So we have to look at the dollar. We have to look at the seasonals, which is the solar cycle essentially. And then we're going to look at these astro periods that Mars retrograde. And to me, that's important to look around September for a possible top if it's still rallying in the market. So, and the Fed juice is still pointing up on it. I caution people because I think if the dollar just makes a sudden reversal, these metals could reverse hard too. So it's definitely not without risk. And you saw this volatility here the other day. I mean, overnight it went up and it collapsed, and that was related to the dollar.
Hey, listen, thanks for joining us, and stay with us to tell us what you offer the folks, and we'll be right back with Shane Smoyan, wolftrader.com.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Shane, we've got a question from one of our listeners, and you haven't really changed your overall long-term opinion of the market. Is that correct? Do you still think we're going to be going higher?
I just think in the short term, we could have some issues in the short term. We'll see how it goes. I just long term though, it's still, I didn't get to those charts, but yeah, I still think it's positive on the long term.
Okay, we have one. Why don't you go ahead and tell the folks how they can reach you, and then we have one other quick question, and if you have time. So tell the folks how they could reach you.
Or for those of you who just tuned in late, I'm Shane Smolian from Wolf Trader Futures. You can reach me at shane@wolftraderfutures.com. or www.wolftraderfutures.com. Make sure that you have the word futures after it, because there's a lot of other wolf traders out there, but this is my site here. Newsletters, just so you know, we do have newsletter services. If you would like to subscribe, we would be more than happy to help you out. There's a 7-day trial on these. They're $39. I'm looking for these newsletters to come out on August the 1st to the 2nd, depending on what this storm does. There's a storm out there coming my way. So I'm trying to get all of my stuff on my backup servers on the cloud right now in case we do lose internet and whatnot. So probably the 2nd it'll be out. I do have a new Uranian astrology newsletter this month. So this is really exciting. For those of you who want to just learn about the astrology part of it, I've moved all of that stuff over to one newsletter. So it may or may not have anything to do with the markets, but we just kind of muse around, talk about the aspects, talk about the Uranian astrology, how it's different than regular astrology. And a lot of people have expressed interest in that. That's going to come out August 1st or the 2nd. So that's like a whole new thing. It's exciting. We're going to have videos on, different astrological aspects. And then, of course, we have our market videos, which are just pure market. And that's the S&P, the metals, the energy, the currencies, and the cryptocurrencies. So, this is exciting. I think we've got a solid group here of 6 newsletters. And each day, these are getting better. We have more indicators like that Wheel of Fortune indicator. It's really good for trend analysis. So check it out. Come on by and drop me a line.
Thank you very much, folks. We'll be back on the air tomorrow. Hopefully, we'll have Bill Meridian as our guest. Hopefully. He's in traveling right now. 877-927-6648.